Hello, it's Adil bringing you a review of the FTSE 100 for Tuesday's trading, the 12th of August 2014. Okay, right. So yes, we certainly moved higher. Obviously, technically it was set up to move higher, although obviously we had a seller Asian session overnight. The Nikkei and the Shanghai were up quite considerably, as you can see here. The Asian session, quite a remarkable move higher. Obviously that led European markets obviously higher as well, and the US markets obviously closed higher, with oil and gold down for the day, obviously because of the de-escalation with regards to Russia and Ukraine, the truce being extended in Palestine, and obviously Palestine and Israel, and the only concern that we have at present, which is a wild card, is Iraq. Although the Russian situation certainly did escalate. Today I had an interesting day. Overall, minus 8 points, well, minus 38 points for today actually, because I got stopped out on my Euro stocks as well, Euro stock shorts. So I did expect the gap to be closed initially with the gap higher, but the market certainly pushed higher. So minus 38 points for the day thus far. Although I did manage to get plus 35 towards the end. So overall, I did get stopped out. So overall, minus 3 points for the evening actually. So I managed to get a short on the DAX at the 92 level. So plus 35 on there. After having been minus 38, so overall minus 3 points for the evening. So more or less a flat day for me, to be honest with you. Although I do have a long euro, and I have a short active as well, which really are more or less flat to slightly, well, one's positive, one's negative. So we'll see how that goes overnight in tomorrow's trading session. Okay, so basically that's basically the reason why we had the rally. Although midday we did have the NATO chief state that the Russians were attempting to invade. Then you had the Red Cross humanitarian mission supported by Russia, and then you had one of the EU chaps, Mr. Barroso, warning Russia, and also Mr. Obama warning Russia as well not to intervene. So that certainly remains a very volatile situation with regards to Russia and Ukraine, and that could certainly send the markets in a tailspin very, very quickly. Okay, although the Russian market certainly was positive for today, certainly was positive, and that's mainly because of the fact that we had the GDP, Russian GDP, higher than expected, came at 0.8%, and obviously with regards to Russia talking down or looking for some kind of truce over the weekend with regards to Ukraine, and obviously with this Red Cross mission, humanitarian mission, obviously being employed, and obviously that's the situation that we find ourselves in. Okay, so that's basically where we are with regards to that. Okay, so that's something that we're going to try and focus on. Okay, so that's basically what caused a short squeeze, and that obviously continued from the Asian session into the European session into the US session as well. So where do we find ourselves now? Okay, so it all obviously hinges on what happens in Asia overnight. Although risk FX has remained weak, that's one of my concerns. Okay, so if you look at a chart of the Aussie USD, that's not exactly a bullish sign with the HNS formation in the daily chart. And if you look at a small time frame, look at a next 60-minute chart, certainly hasn't remained bullish, although it does have an inverted head and shoulders formation now, so that's something that we'll certainly keep an eye out for. That's one of the reasons why I'm actually long the euro, so that should be quite interesting. See exactly what happens there. But also the New Zealand dollar as well, that's obviously remained weak, and as you can see there, 10-minute chart certainly plunging lower and lower. Okay, this certainly doesn't have an inverted head and shoulders, this is just outright weak as it is at present. Okay, so keep an eye out for them too, and obviously they don't the movements in them at present do not bode well with regards to the markets themselves. Okay, so USD JPY, I have a swing long on this, looking for a target of around probably 104 region on the fundamental analysis service, as you have an inverted head and shoulders, and a breakout higher, so that's certainly interesting with regards to the yen pairs. But as of late, they have divorced from the market. So, but again, we always respect the yen pairs, Euro JPY as well. As you can see, inverted head and shoulders, and that's one of the reasons why I'm obviously bullish on the Euro USD. Okay, so this is in a very interesting little pattern. Okay, and that supports the USD JPY, and that obviously supports the yen going lower, which means that there's risk off. Or alternatively, there's probably more than likely with regards to talk over the weekend and last week with regards to QE, and obviously Japanese GDP and inflation forecasts not meeting target, or not meeting the intended target, so means that they'll remain dovish. Obviously weaker yen spurs the Kai trade or the risk trade, and that generally means bullish for the stock markets. But having said that, the US markets are into a resistance point. As you can see, technically this is into a resistance point here on the S&P 500, and also if you look at the Nasdaq, you've got a beautiful H&S formation. So if I go to the daily chart of the Nasdaq, as you can see, we've put in the right shoulder at 50%, retested the breakout expanding wedge, rising expanding wedge, which is bearish, and obviously the right shoulder is more or less in line with the left shoulder, and down we go. Okay, so whether or not the yen is a move, or is move USD, yen and Euro JPY is a move more rather than risk on, is more of a move of a strong dollar and a strong euro as opposed to a risk on. Again, that's going to be interesting to see exactly what happens in the next 24 to 48 hours, especially with regards to the way the markets are poised. Again, geopolitics will dictate, so again, that's going to be very interesting. See exactly what happens there, and this is why it's so hard as a day trader to navigate these markets at present. Okay, so bear that in mind. Right. Okay, so let's get back to the FTSE 100. Let's give you a technical perspective on there. Okay, so yes, like I stated on my previous video, this is a multiple crossroads of support. Obviously, we've bounced and we've hit support. So where do we go now? So we've had the dead cat bounce. Will it sustain itself, or will it come to a close? From my perspective, you are on a FTSE 100 into a level known as previous support equals resistance, and that's exactly where we are at present. You can use your Fibonacci if you want to be posh and I should say entertaining. So we're into a 38% resistance. So again, that will be solid resistance. Hence the reason why we sold off at the 38.45 region, or 68.45 region, should I say. So watch out for 68.45 resistance. That's basically what I'll state for now. So previous support equals resistance. Let's have a look at the FTSE 250. FTSE 250 again, same story, into the 50% resistance. Previous support equals resistance. So again into a resistance zone, although quite a substantial move, but certainly resistance in the interim. FTSE 350 again, you can use the same logic again, where previous support equals resistance, and that's exactly where we find ourselves. You can use your Fibonacci, take it from the pivot high, take pivot low, and we're into that 38% region. So what does that mean? It means that we're basically looking for resistance early doors for the FTSE 100. So that's basically what I'll be observing, and again, Asian markets will dictate. Okay, so let's have a look at the small time frames now. Let's show you a view. Actually, before I do that, I'll give you another perspective. This is what I use for the FTSE 100 to gauge where the market's going. Okay, so I generally tend to look at my sectors. So for example, this is the pharmaceutical sector. I'll observe this, so I can clearly see that's into resistance now. That supports my view that the FTSE will be weak. Okay, I can look at other sectors as well. So for example, the banking sector still remains weak. Okay, series of potential lower highs here, so certainly not looking bullish at all from my perspective. Still weak. Okay, so as you can see there, obviously some type of wedge pattern, so looking for a potential move lower into the lower wedge, and we'll see exactly if that breaks out. I mean, you can argue that there's an inverted head and shoulders forming there, but again, we need a catalyst. Now with regards to European banks, I mean, there's a tweet out before with regards to Russian sanctions and European banks feeling the brunt of the pressure, so obviously that doesn't bode well for them. So interesting. Okay, interesting time. So take it every day as it comes, and we'll see exactly what happens in the Asian markets, and I'll be able to dictate accordingly. For the interim, obviously after we broke out that previous wedge there on the banking sector, the markets seem to have been paid respect to this wedge, or should I say this wedge, this gap fill level here. So this gap fill level, obviously once we've closed that, we're certainly holding it. Looking at a 60-minute chart, again, like I said, we're in this wedge pattern, so either we break out and test that level again, or we break down given the sanctions, and obviously the market sell off and the FTSE follows suit. Okay, that's going to be very interesting as to what happens there. Daily chart, obviously we are into that support level, gap level. Okay, so we'll see. Okay, so 10 minutes, 60 minutes, both into resistance with regards to the banking sector, so therefore that doesn't bode well for the FTSE 100. The mining sector itself obviously had a stellar rally today. Certainly had a stellar rally today, and certainly seems to have come short and is into resistance itself. So again, watch out for that with some last minute doji candle there to finish the day, and that's basically where we are. So into resistance. So that certainly doesn't look as if it wants to sustain its move higher. So again, so if that's into resistance, the FTSE's into resistance as well. The oil and gas sector into 200 MA. Resistance in the 10-minute chart. You've got gap fill just above. You've got previous support equals resistance as well. So these are all regions that we're looking for. So here we go. Previous support equals resistance, and that's the gap level that we're looking for. Okay, so you got a 10-minute chart as well, the 200 MA, and the gap level isn't too far off, which is there. Okay, so once we close the gap, that's into resistance. So again, if the oil sector is into resistance, that obviously doesn't bode well for the FTSE 100. Now the next one is a retail sector. Retail sector 10 minutes, as you can see, failed to make a higher high, so not obviously doesn't bode well. Again, we're into 200 MA, we're into horizontal resistance. So what does that mean? It means that the retail sector is under pressure. Retail sector under pressure. What do you think will happen to the FTSE 100? Well, obviously it will be under pressure as well. So therefore, what is the next move? Next move's down. Why? Because we have an unfilled gap just below. Can you see that gap there? Okay, you do have some form of inverted head and shoulders forming, so we respect that. Look for a pullback, and then obviously then we can certainly turn bullish. Okay, so hence the reason why I'm remaining bearish for the next 24 to 48 hours on the FTSE 100, along with subscribers on the live analysis service. Okay, right, so that's basically where we are. Let's have a look at the FTSE 100, should I say. Okay, yes, we've broken out the downtrend, so that certainly must be respected. We've obviously taken the pivot low to the pivot high. We've hit this neckline now, so watch out for this neckline. I'll draw it dotted line just to make sure that you're aware of that. Okay, so watch out for this inverted head and shoulders pattern. So left shoulder, head. We've obviously hit the neckline today, looking for a pullback, hence the reason why I'm bearish. We have the unfilled gap below, so bear in mind that needs to be closed. Whether the market sells off and closes, that makes the right shoulder and closes that gap, and then rallies, that's certainly an opportunity. Or it could totally ignore that and start to rally early. Obviously hit the 200 MA, hits the inverted head and shoulders target, and then we may well see that gap close later on, etc, etc. So there's several possibilities there. Obviously we've got this gap that needs to be filled up here, which is the 6665 level. Watch out for that. Okay, so watch out for the inverted head and shoulders. 10 minute, obviously we are into resistance here. We've held that resistance level into pivot R3. We've broken this trend line, which was the intraday one. Okay, so that looks like it's going to get, but it's not broken yet. We'll look to get broken tomorrow or overnight. This obviously depending on how Asia reacts, provided there's no geopolitical headlines. Again, your unfilled gap is there, 6672 to be precise, and the ideal gap that we must close is the one up here at 67. Let's get this right, make sure it's 100%. Yep, 6727. Okay, so that's the gap that we must close as well. So two gaps are up there. Okay, so that's basically where we are. So if we do break this channel on this bullish channel that we can see here, let's see if we can get parallel channel into here. No parallel channel being respected. Other than that, there's nothing that I can certainly conjure up with any of the lines that I can see. I mean, you've possibly got this one, which obviously gave you the perfect top there. That's the one that I was observing, and that's basically where we are from that perspective. Okay, so TA certainly does work, folks, as you can see. It's just a matter of obviously applying the correct TA knowledge. Okay, so and learning from somebody who actually does understand TA correctly and can teach you correctly as well. Okay, so that's basically where we are. We do have we do have this inverted H&S formation, so watch out for this one overnight. Okay, provided obviously we don't gap higher, given the fact that Asian markets are ecstatic right now. So there's your little mini H&S. So I'll certainly be looking to short this market going into tomorrow. 6630, head 6645, so you're looking at 6615. Again, that will be a gap level there, and obviously previous horizontal support 6600. And if we do get more bearish news out of Russia, out of Iraq, out of Palestine, Israel, then obviously that gap below must close first before the market obviously tries to march higher. Okie dokie, so that's basically where we are. That's the technical pattern, so watch out for this resistance level here at 6650, and obviously if the market does propel higher overnight than 6670, gap fill will be resistance. Okay folks, so I think that's enough for one video. Risk on, risk off, wax on, wax off. Goodbye now.